Welcome back to the Dividend Diplomats YouTube channel, guys. You've got Bert, the Hurt, and Lanny, the DD guys, and welcome back to another fast-filled episode of the Dividend Diplomats Stock Pick Quick Pick Monday Bash. Let's get this going.
Before we do, smash that subscribe button. Give this video a thumbs up. Let's get some dividend stocks thrown your way. We've been doing this series for about a month now, where every Monday morning, Lee and I run the metrics over the weekend, and we each pick one stock that we're liking, we're watching, and chances are we may even be buying it in the upcoming week.
Guys, we got two stocks, as Bert mentioned. The stock finished off on a decent note, well over 4,500 in the S&P 500, guys. Could they finish off at some all-time highs by the end of the year? We don't know. We don't care because we're just buying dividend stocks. So, Bert, we've got two stocks here. Would you like to go first or would you want me to go first? You tell me, brother.
You know what? I went first last time. Why don't you go first this time, Chico?
Whoa.
Yeah.
Okay. All right, guys. We're going to talk about a stock here that hasn't been talked about in quite some time. I own a lot in my portfolio, well over 100 shares. Bert, I think you even own a lot of this stock as well. This stock cut their dividend for the first time in history, or at least since the World War times back during this pandemic of 2020. And we're talking about Shell. Ticker symbol is SHEL. Yes, the energy oil giant Shell. Energy is really one of the industries that is still showing some signs of undervaluation right now because the price per barrel just hasn't been able to, hold its price point. Obviously, with inflation and everything after COVID, obviously, Exxon, Chevron, BP, Shell, record earnings. It was happening in 2021, 2022, you name it. So Shell is on my list because of what the metrics show, despite them being up 18% this year and up 20% since last year. I'll quickly run through the metrics again, the PE ratio, the payout ratio, and the dividend growth rate, guys. This is the DD stock screener. Shell trading at 65.87, Bert. Now, when we dive into that first metric, I used an estimate of $8 in earnings per share. Most estimates I saw were a lot higher, some even into the nines. But I'm like, let me just use eight. Let me discount that down a little bit. Not
Yeah,
sure
be,
what.
be conservative with it. I dig it. I dig it.
And even with being conservative, the PE is about 8.23.
Yeah, so it could be even lower if you use the actual earnings that you're seeing, but I dig it and I respect the conservative nature of it. So dividend, let's talk about that payout ratio here, Lanny, because you said what? They cut their dividend for the first time in history and they've been working it back up here. Now
Oh,
to the
yeah.
point where their annual dividend is $2.65. That gives you a really low payout ratio of 33%.
Yeah. Pretty safe, right, Bert?
Yeah, I'd say so. I mean, it's
Yeah.
below our 60% threshold. It's below our perfect payout ratio. If that's not safe, I don't know what is.
True, true. And hey, like you said, even if the projected earnings goes from 8 to 4, they're still at, the 66%, payout ratio. Kind of what I alluded to earlier. They cut the dividend in 2020, but since then they've actually rebounded the dividend by a tune of 106.875%. They cut it down to 32, and Bert just mentioned they pay 66.2 cents now. So dividing that by 3.5 years, the growth rate on average has been about 30.5%.
Hmm.
I don't expect that going forward, but I do expect 10 to 20% increases still over the next few years.
Yeah, that's beautiful. And with the increases, with the strong, um, with the performance, the yield is actually hanging right around 4% mark. It's at that 4.02% dividend yield. So a
We'll
nice
take
out
it.
there. Yeah, more than double the S&P 500. Just a tad below some of the high yield savings accounts you're getting out there, but Shell's at least paying shareholders a nice amount to wait and hold.
So again, despite being up 18%, they're really high on my watch list. I like them, kind of around this price point. Are you guys buying oil? Let us know. But Bert, I'm going to toss this ball to you here. What do you got for us?
Got the OBJ one-handed grab back here. We're talking a dividend aristocrat, Medtronic. Ticker symbol MDT. I accidentally said the tickle symbol again, and here I am, back
Yeah.
at it. So yeah, Medtronic's almost at a dividend kingdom. They've increased that dividend for 45 years. So we all know that the stocks have been booming of late, right? Like you don't have to live under a rock to see what the S&P 500 and so many other great companies have done. Medtronic, that has not been the case. The prices continue to hang around in that mid 74, 75, $76 mark. So when I was looking to buy at the end of last week, this one just kind of jumped out at me, popped off the page, and I said, you know what? I'm going to I grabbed 3 shares of Medtronic on Friday. I'm probably going to keep grabbing some more here during the short Thanksgiving week. What's interesting is when you look back at the August earnings release for Medtronic, strong revenue growth across all sectors. And they even raised their guidance in the earnings release. So when they released earnings back in August, it's pretty positive vibes there for Medtronic. So despite the fact they didn't have a strong dividend increase in May, it was only 1.5%. Management spoke of results that were turning the corner there for Medtronic. It'll be interesting to see what happens when they release their fourth quarter earnings here in the next few weeks, few months. It's going to be coming up here soon.
And Bert, what does that first metric then look like right now for
Yeah.
MDT?
So their price is 74.76. Forward earnings are $5.12. That gives you a PE ratio of 14.60. So much cheaper than the S&P 500. But not the cheapest stock out there, not the most expensive. It's just trading at a value compared to the market, which is the
Yeah.
first metrics of our screener.
Yeah, good value, good payout ratio at 54% based on the $2.76 dividend.
Mm-hmm.
Safe, perfect payout ratio in the 40 to 60%. Again, dividend aristocrat,
Yeah.
been growing dividends over 7% on average per year. And now, Bert, with that stock being down again this year, down last year, down year to date this year, the yield has swelled up to 3.69%.
Yeah, and it's looking great. And look, I'm not going to lie. Their dividend increases aren't going to be going back to 7% soon. We're probably going to see closer in the low to mid single digit for the next few years, like so many other companies were projecting. But I love their long term history. I love the sector they're in. More importantly, I love the position we're building in our portfolio. So most likely we're going to be grabbing some more shares here of Medtronic as the market opens today on Monday, and maybe even more throughout the rest of the week as we look to deploy some capital to get some income producing assets.
Whoa, guys, that was the Dividend Quick Pick Stock Pick Monday. What stocks are you buying? What stocks are you watching? Remember, subscribe to this channel, like the video. For any other parting words for the community?
I can't think of something, Lanny. Is there anything else that we usually tell everybody?
Man, that is it. You are either with us or you're against us. Jack, that was Bert, the Heart Man, and Lanny from the DD. Over and out.